You know, I think the market today is kind of boring. I'm even going to continue that theme with no interesting intro video. The markets have really just been moving sideways between the range of 4,100 and 4,200 for the last couple days. We see that a heat map of the S&P 500 is pretty much red, mostly gray with very few speckles of green. And crypto's not looking good. Everything is red, red, red. I will be giving you guys a crypto update this week. All right, let's just get into some earnings. We had Coca-Cola came out, ticker KO. These guys beat earnings per share and revenue, and it was actually the 14th straight consecutive quarter in which they've beat expectations of Wall Street. And yet we see that the stock really didn't move. I had warned everybody in yesterday's video that the inverse head and shoulders pattern and that neckline of $64 just seemed pretty strong, and it pushed above it. It went as high as $65, but after the earnings came out, and despite the fact that they were good, the market pushed it back beneath the $64, and that means that even for value stocks such as Coca-Cola, the price is elevated and buyers are just not swooping in to buy at this elevated price at this moment. So what's up for tomorrow? I told you guys I was going to cover McDonald's, Microsoft, and Google for you guys. McDonald's reports before the market opens tomorrow, and Microsoft and Google, they report after the market closes. So let's just dive into Microsoft. These guys are up 19% for the year so far, but they're still 20% down from their all-time highs. All right, I've got a question for you guys. I want you to throw it in the comment section. How many times do you think that Microsoft will mention the words AI during their earnings call? I'm going to venture to say a lot, because that's really what has pushed the price of Microsoft up so far since the beginning of this year, is all of the buzz and the excitement around AI. A recent quote from one of the Microsoft executives: "We've also applied the AI model to our core Bing search ranking engine, which led to the largest jump in relevance in 2 decades. With this AI model, even basic search queries are more accurate and more relevant. AI is why the stock is up, but earnings could turn out to be buy the rumor, sell the news, because everybody is getting in on this AI game and people want to see the results. We know it's going to improve your search queries, Microsoft, but we need to see it make you some money." Now, interestingly, over on Quiver Quant, they reported that Nancy Pelosi had sold $100,000 of her Microsoft recently. And it brought back the reminder of how Elon's brother had sold a bunch of his Tesla right before earnings. Is this yet again an ominous sell signal for Microsoft going into earnings? When we take a step back and we look at the charts, the bottom line is that Microsoft is up against a long-standing historic resistance at $292. Now, it hit that on April 6th, and that's when the momentum shift occurred, and we actually got a sell signal for Microsoft that it had just gotten overbought, and since then it's been cooling off. The question, though, for a lot of you guys is, how far is it going to pull back? Could it still go up from here? And I'm going to basically cover the range for you. I'm going to give you guys a clear and definitive range for trading Microsoft over the next couple days based on the price action that we get tomorrow after close. Before we do that, I just want to give you guys a picture of the last chart that I gave you before earnings last quarter. And you can see that I predicted it pretty accurately. That's my drawing before the stock actually made that move. I called it a buy at $226, and I said that the top would be $280. It fell short of that, hitting right around $276 to $277, but the trade range was pretty spot on. Okay, so here's what I think is going to happen next with Microsoft. There is a pretty strong chance that if they do well with their earnings, that they could spike up and retest that 292 level again, maybe even hitting as high as $294. But I think that we're going to see it potentially get rejected because I think it's kind of pricey right now. A lot of the S&P 500 is pricey right now. So I think we have to watch for a close back below 292. If we see that close back below 292, it may be signaling that a further push up is over and that it could continue to go down from there. But here's the more critical level. I think it's going to be $289. That's going to be the high end of the trade range, and I think that we want to see if it can hold above that for the remainder of the week. But if it comes beneath that, then I think that that also would be a second confirmation that the upward trend is over. If for some reason it jumps above 292 and sticks, then yes, this could go as high as $308. But the market's got to find the buyers who want to get in at this price, believing that it's going to go higher. And as I said to you guys in my Sunday video, there's just too many macro events that are causing people to question making these types of purchases. And so the future trade range for the next quarter for Microsoft I see being between $289 on the high end and potentially as low as $250, which from a very simple technical view is just a back test of the 200-day moving average. That would actually allow for Microsoft to continue to be in bull territory and potentially continue to go up. But at this point, it may cool off, come back, and test its 200-day moving average before it can go higher. All right, I'm going to share with you guys what I'm doing with Google. I think it's going to surprise you guys, but before I do, if you need better trade tools, check out the link in the top pinned comment for the moomoo investment app. They're giving away up to 15 free stock, a potential cash coupon of $1,500, and a 1-month subscription to Benzinga Pro. This will help you get your options game going. Now, I also host a chat group on the app called Stock Josh Fan. When you get your free stock and you start your investment journey, then come over and find us in the chat group and join the conversation there. Okay, let's dive into Google. I think you guys are going to find it interesting because I've been a big Google supporter. Back when Google was $120, I told everybody that it's just time to sell Google and reaccumulate it at $92 and below. And over the course of time, even though I had a lot of people push back on that prediction, that's exactly what ended up happening. It eventually came down to the 92 price range, which happened to be the 200-week moving average, which in recessionary environments, Google has hit before, and it actually traded beneath it. Now, I called that an accumulation zone and accumulated there for weeks and weeks and weeks. And in this last run-up, guess what I did with my Google? I sold it all. I unloaded all my Google bag. So I'm going to break down why for you guys and what I think is going to happen next. I think it's going to be very helpful for you guys to understand these charts. Now, this is not a suggestion for what you guys should buy, sell, or hold. I'm sharing with you what I did and why I did it. This is the Stocks with Josh show, and on this page, I'm simply sharing the charts, I'm sharing my trades, and I'm sharing my logic with you guys. If you like those predictions on stock and crypto and my analysis, then hit the subscribe and the YouTube all notifications bell and join the fam. All right, Google has been underperforming a lot of other big tech. Even though they're up off their lows, they're barely above the 200-day moving average, and I see it falling beneath that. Now, I'm going to be looking for a potential re-entry and a bounce back at $94. That's sort of what I see a bare minimum happening. But I actually don't believe that the $94 mark will hold. But I will get into it at that place for a potential bounce. I will then look for a little bit of profit. That will be a swing trade, not a long-term investment. And I'm going to be looking very carefully with a stop loss at $93 to see if it breaks. Okay, the most important thing I want you to identify in the Google chart is that we're continuously making these upward channels that break to the downside, and then we get another upward channel. It breaks to the downside, and I think we're in yet another upward channel that's going to break to the downside. That's simply why I'm bearish. The technical setup just doesn't look good, and you know I do trade the charts, and I do like to make long-term investments according to the charts, and I just see too many bearish signals in this chart. Go ahead and screenshot that chart, write my prediction down, and let's watch together to see what happens over the next couple of months. I'm bullish on Google in the long term if I can know where the bottom is and if I can get a good price. So far, I've traded it successfully. I've been leery of it because the charts are just not showing me great relative strength, and I believe that they've entered into a highly competitive environment. The cloud service is not as profitable as I would have liked it to be. They're competing against the Amazons and the Microsofts, and we see that everybody is doing AI, and we see that Google has not done AI as well as everybody else, and so this causes me concern for the long term. Now, I like a lot of the other components of Google. I love their YouTube business. We're talking on YouTube today. I think that could grow 10x in the next 10 years, but I think we're going to be in a rough patch for a little while longer, and I think we're going to bounce along that lower range. And as I've been saying for weeks in regards to big tech, don't get caught up at the top. I'm not going to, but you do you. Final prediction on Google, I believe that we could possibly be back to the $94 range somewhere at the first week of June. All right, let's talk about McDonald's. I've been saying for a number of weeks that there's going to be this rotation over to these companies like McDonald's, Walmart, Coca-Cola, Home Depot, and I think that we've been seeing that, witnessing it in the charts. They've been outperforming the rest of the market. Now, I'm not in McDonald's, but let's check out this stock and compare it to what we just saw in the Google chart. We have the exact opposite. We have these downward channels that have been historically breaking to the upside and then repeating with another downward tight channel of price compression, which then breaks again to the upside. And look, we're in another one of these breakouts. Now, I do believe that McDonald's could cool off because it's way up here in price discovery mode. And if you look at the long-term, multi-decade view of McDonald's, this thing is a beautiful, beautiful chart. It would have made sense to invest in McDonald's and just keep loading the boat because McDonald's has just continuously made higher highs. But even though the trend is strong and the trend is green and we like to trade the trend, I want to give you guys some warnings on McDonald's. It did print a momentum shift sell signal because, like I said, that price has gotten lofty. If McDonald's pulls back, I think an area where it would make sense for it to pull back before it could go higher would be between 260 and as low as 250. That's what I think is possible if we're going to have a rough month ahead in the month of May. And that brings me to my final thought for this video, which is a question I keep getting in the comments. There's an old saying, in May, go away from the markets. And I'm going to tell you that I would say that that actually does hold pretty well. And even though May could be up, nobody knows, I don't have a crystal ball, I'm leaning to the fact that the market's elevated. The trade multiple for the S&P 500 is simply too high and it's got room to come down. And I think all of this can cool off. June is typically one of the more bearish months for the market, whereas April, I told you guys, is one of the better months, and we saw a nice strong April. But May and going into June may be a continuation of a cool off. We'll have to see 1 week at a time. You guys know that I'll be with you along the way. Again, thank you for hitting the like, hit that subscribe and that YouTube bell if you want to do this journey alongside with me. Peace and blessings, my friends. Take care. We'll see you tomorrow.